people that attend. 13 people that attend. Let's see what we can do. Encino's my podcast sponsor this week. Yeah.
I'm Lori.
Hi, Lori. I'm Robbie. We've talked a bunch on the phone. Yes. So as people that are listening to this show right now might be able to hear, we're here at the Philadelphia MBA Annual. Pleased today to be joined on Mortgages with Millennials by Carty. Ali, welcome back. You are our first repeat guest, host, presenter, panelist. What should we call you?
Awesome. I'm happy to be here. I know Kristen wasn't available today, but I hopefully can provide some Gen Z or like younger generational insight as well.
I know. I said Kristen wasn't cutting it. We need more numbers. We need more people. We need more sponsors. Call in the big guns. So we got Carty.
Oh man. Well, I'm happy to be here.
Which I'm glad you're here with me. It seems like you're everywhere, according to people I talk to in the industry. And so I was hoping that you'd be at the annual conference because you're at like every conference. You're just at Acuma.
I know. I actually am going to a speaking engagement on Thursday where I'm going to be talking about Gen Z and like sharing social media. And I was like, if I did Sunday to Tuesday, came home, and then like it was just a lot for me on the tail end of a cold. So I was like, Blake, Colby, they're representing. But yes, I am having major FOMO and like seeing you there and like seeing people. I'm so jealous.
Does it seem like my internet is pausing? Can you hear me?
No, but did you not hear me?
No, I did. It started out slow and then it picked up. So
maybe it's mine.
No. It's because I got the message. It's mine's unstable. But anyways, thank people for joining us today. I know there's a lot of people in Philadelphia that probably couldn't make it. The girl that I've been seeing got me this shirt, Tasty John, which is apparently a Philadelphia thing. John is like means anything. I looked it up online. Hold on. The answer: an all-purpose noun used to reference any person, place, situation, or object in Philadelphia. So she said, "I'm a tasty object." I don't know, but I was told to wear it. If we have any Philadelphia viewers or Philadelphia adjacent viewers or anybody knows anything in the audience, chime in about your knowledge of John. Maybe it's like an elaborate April Fool's prank she's playing on me, something like that. And also attendees, if you have any questions, ping us in the chat. We'd love to hear it. So Ali, the feedback that I've gotten on this show is I should, like a good speech, you should introduce what the show's going to talk about. Then you talk about what the show is going to talk about, and then you summarize what the show just talked about. So today with you, I want to talk about, I know you've done a lot of surveys recently. You have some good data for us. I want to talk about differences between millennials and Gen Z. And then I want to do like a get to know Carty rapid fire type thing.
We're going to mix it up.
We are going to mix it up. But I'm gonna start by kind of giving people a quick market update here. And so last week I had talked about three main things. We talked about a Chinese real estate developer defaulting on their payments. We talked about strong U.S. payrolls, and we had talked about the Israel-Hamas conflict. And so the payrolls numbers, in addition to strong CPI, Consumer Price Index, and PPI, Producer Price Index data last week, you would think that would make the Fed want to hike rates at their October 30th and November 1st meeting. But the Fed, through consistent messaging in the media, we've heard from a lot of Fed speakers, they look likely to stand pat. It looks like there's going to be no rate hike next week, 2 weeks from now. Wednesday, November 1st is when they announce the decision. Shouldn't be a rate hike there. There is still about a 30% chance that they will hike before the end of the year. I believe the meeting after that is December 15th and 16th, I believe. So there's a chance that they hike before the end of the year. But this meeting, it's priced in that they're probably not going to. Even with payrolls being strong, even with inflation exceeding expectations, the Fed's kind of made its bed and said, we're going to leave rates where they are for now, but we're going to keep them at restrictive levels for longer than people are expecting them to be, or had previously expected them to be. And what that should do is act as a suppressant onto inflation for an extended period of time, and hopefully continue to bring it down and knock out some of the stickiness that we've seen with it. This week, we have a lot of bank earnings from Wall Street. that sort of thing. We'll receive existing home sales, the NHB housing market index, and housing data. And in terms of the Israel-Hamas conflict, normally that would provoke a flight to safety, which if you think about US treasuries, they're seen as a risk-free asset. When things in the world are going haywire, put your money in US treasuries. It's a safe investment, drives the price up and the yield down, which would be good for mortgage rates. We haven't quite seen that. And yes, Israel is massing troops at the northern border of Gaza, but they haven't scaled up in terms of like making this into a much larger regional conflict, maybe bringing Iran in, maybe bringing the US in, those sorts of things. So that remains to be seen if we're going to see rates come down as a result of that. Allie, I saw you making some weird faces. Anything?
I am just so impressed that you know so much about the market update. And I know I read your dad's commentary and I listen to your podcast, and sometimes I'm just like, holy cow, there's so much I still don't know about this industry. So I'm just thoroughly impressed.
Well, let's transition into your specialty then a little bit. Can you give people some
Wait.
background?
Can you
What?
define for me what it would look like? And this is probably one off. Like the ideal attendee for this webinar would be mortgage professionals, right? Not as much like Gen Z, millennial, like consumers. Like our target audience is mortgage professionals, right?
I'm like, let me quickly look through the attendee list to see who called in here.
Well, I'm just saying,
No.
who are we? Who's the message going to? Because as a Gen Zer listening to the market update, like that would be really digestible content. So you don't need to like one off and talk about how we can bring this message also to a larger audience. Anyways, we can transition if this is mainly
I will
towards.
answer your question. Let me answer your question.
Yeah.
And I'll do it in a very circuitous way.
Okay.
I recently visited a cousin of mine in Charlotte, North Carolina, before
Great.
you and I were ships in the night in Savannah, Georgia. And they said, well, we want to get you on TikTok. There's this whole mortgage TikTok. I want to get you TikTok famous. And my cousin, said to me, I have dreamed of being able to make money on TikTok without using my own face. And I said, this face ain't anything to write home about, but sure, you want to use. And she's like, the market updates are perfect. So we're going to try and start taking some things from this and going on to TikTok and hopefully doing market updates. And I don't know how to monetize it.
It's funny because I am, if anyone's attended any of my recent like podcasts or stuff, I'm revamping how I want to position myself on TikTok because it is really important to figure out who your audience is. And I think so far my audience has been the mortgage industry, but I want to figure out how I can also like help people my age who are young professionals trying to understand the market, trying to understand different things. So it's funny, this conversation. I know we're live, but I think it's important. I think talking about this to a larger audience is going to help more people. So good for you. I think that would be very smart.
Yes. And in response to your actual question, this was meant, it's kind of twofold and you hit on both sides. It's meant for mortgage professionals to be able to better communicate with the younger generation. Hey, we've been talking about how millennials are living in their parents' basement, spending their money on avocado toast and not on houses. How do we get them into houses? How do I win that business? Because I think at this point, millennials make up more than 40% of first-time home buyers. And that's a lot of the business that's happening right now in the industry is first-time home buyers. There's not a lot of other business out there. So how do we communicate with them? How do I win business? That was one side of things. Then Kristen's huge on financial literacy. And so we wanted to find ways where I could say to my friends, hey, come on and listen to the show and you'll learn about mortgage banking. And this will give you an opportunity to do that. That might be later down the line. I don't think we've done a great job of that, but I am interested in educating the younger generation.
Yeah, I mean, I think there's such a need. Like my best friend here in Nashville, she just recommended that I set up like a high yield interest savings account. And I was like, how did you learn about that? And she was like, TikTok. And she was like, I follow this girl. Her name's Emily. Like, I don't remember the exact username, but I followed her. And she does like a financial tip like every week about how to be financially motivated, financially preparing yourself for the future. And here my friend is telling me to set up this savings account. And she learned about it through TikTok. And she's like accumulated a lot of wealth over the past year since she like started it. And I'm just like, wow, that's so smart. Like people are learning things through TikTok, like indirectly. And I'm sure that person who posted the video has no idea the impact that it's had on that individual. And now her friend group who all just went and started a savings account because of that video. So I think it would be really powerful. And I'm tiptoeing on it, figuring out how I can best do that, but we should partner together on how to really kind of create a finfluencer image for the mortgage
Yes,
industry.
I would love that. I thought you were already on TikTok and we're like
I'm
one
on,
of these
I am,
influencers.
I'm on Instagram and I kind of realized the content I'm posting on LinkedIn is for a different audience than I want to be doing on TikTok and Instagram because I want TikTok and Instagram to be more consumer based. It's just hard for me because I'm not a licensed originator. So when I do like I can't offer mortgages, I can't offer those types of services compliantly. So I'm trying to figure out how I can educate and talk about the mortgage industry, talk about being a young professional, and pivot to still talking about mortgage on TikTok, if that makes sense.
It does make sense. And this will be part of the Ali Carty rapid fire that we'll get to at the end. And you're welcome to ask me questions because I'm an incredibly interesting individual. But how do you like, what is Ali Carty's day job? What does Ali Carty do? How does she spend her time?
So I work for Active Comply. We do social media monitoring for lending institutions, credit unions, banks, IMBs, and through this, I've been doing a lot of cold calling, a lot of cold outreach, and I realized the market's really hard. So how can I add value to these people that I'm trying to work with, learn about? And through that, I've kind of developed this get to know Gen Z persona, like bringing value from a Gen Z perspective to better help our clients, our prospects. But day to day, I really am just doing outreach to clients, doing outreach to prospects, trying to figure out how I can better help their business. Talking about social media, talking about our product, how we can help you get started on social media. When I'm not at conferences or slightly missing you at Savannah, I am at home researching Gen Z. I'm researching social media trends and how to best help our clients, reaching out to them, making sure they're up to date, and seeing if they have any compliance software needs.
Very nice. Well, now that you know what this audience is,
Yes.
all 3,000 people that tuned in today, thank you for tuning in, everybody. Like I said, if you have any questions or comments in the chat, reach out. That number might be a slight exaggeration, but anyways, Ali, what have your surveys been on? Bring us up to speed.
Absolutely. So kind of full circle a little bit. In January, I was at MBA IMB. It was a little bit not tensionful, but it was a little bit pessimistic. There was a little bit of optimism, but then we lost it in February again. But since June, when I joined Active Comply, the rate environment hasn't been the most friendly. And so not this June, but last June, I joined Active Comply. And so in January, I was like, how can I help these people? There's two things going on at every one of these conferences. They're talking about how awful the industry is like trending. And then they're also talking about how to reach next generation borrowers. So while I'm still mastering this and trying to avoid the pessimism, I am going to pivot and try to bring value from the conversations I'm having because like in this rate environment, when everyone says the sky's falling, I know 4 people who posted on their Instagram stories this week that they bought a home. So it's like there's still business to be had. How can I make sure that our industry understands how to best capture that business and connect with those borrowers in an environment that may not necessarily be the most ideal for the mortgage industry? So I sent out surveys over the past, I guess it was like January to May. Each week I would send out a survey on really home ownership, financial literacy. Kristen and I partnered together to figure out really the best questions to ask. And then I sent it out to each week. It ranged between 150 and 200 respondents between the ages of 18 and 31. And they were people that I knew personally. The reason I took this pivot was for certain questions, people would respond directly and elaborate on their answer. So while Kristen does a great job at doing, national outreach, mine was a little bit more targeted and it did give me the ability to kind of probe a little bit further. And from those surveys, I was able to schedule interviews with first-time home buyers, prospective first-time home buyers, and learn about their thoughts in kind of a trusted environment where I could hear how they found their LO, where they learned about an FHA loan, all these different like firsthand instances. I was able to pull from those surveys and those interviews. So that's really where I took it. And I had some good turnout and good questions. And yeah, it was really powerful. It opened my eyes to a lot of ways that our industry can be innovating.
And so before we get into some of that data, I think you made a really good point there. And you say, well, I go on social media and 4 people I just said, oh, I bought a home this week. There are loans being done out there. I had a good business meeting last week with some guys out in California, and they were talking about kind of the ways that the mortgage industry can innovate and progress from here and what direction it's headed in terms of what young shoppers want. I want a Zillow product where I can get underwritten on my loan, and then it's kind of one stop. That's all I need. I can interact with my agent on there, interact with my LO. But they were saying, even in this market, there's still 10 to 11,000 loans a day getting closed. These loans are out there somewhere. There's volume out there to be had that some people have been able to capitalize on. And so I'm interested to see what your surveys found. But part of people tuning in is finding ways to work with these borrowers.
Absolutely. And I think one of the biggest takeaways was as a 24-year-old being thrown into the conference circuit, I have been just overwhelmingly surprised by the pessimism because it's not reflective in the conversations I have with first-time home buyers. One of the biggest takeaways was we were not in the game for that 2021 rates. Like we were not there for the 3, 5, 4% interest rates. So over the past like year and a half, as my generation has and the people that I'm interviewing, I'm talking to them like, hey, did the rate stop you? Like, was it? And I kind of want off because I don't want to bring that to the industry and bring more pessimism, but they're always like, I didn't even know what the rate was. Like, it's so crazy to me that people, and I don't know if it's a lack of education, probably. Should we be more transparent about it? Maybe. But majority of them were familiar with the idea of a refi. And they were like, oh, well, I mean, if they go down, then I'll refinance. But I mean, these houses aren't getting any cheaper. And it was like just the message. I think people who are buying understand that. But then also me, like I was messing around with like rate calculator and like throwing some numbers into it. And as a young professional, I don't realize how different a 3.5 rate is from a 7 until you plug in all the numbers. So unless someone is saying, well, a year ago you could have got 3.5 or you could have had a lower interest rate, the consumers aren't thinking about that. They're thinking about, oh, I want to get into this home. I can financially afford it right now. Let's make it happen. So like you said, there's business to be done. 4 people I know last week posted on their stories, like with the title, like the key that people post, like people are romanticizing this idea of home ownership, which I love because it makes other people like that follow them be like, oh my gosh, how can I be preparing myself so that I can make a similar post? How can I prepare myself so that I can feel like that dream of home ownership becoming a reality? So there's business to be had, and but rates are not the end of the world for my generation.
No, and I'm sure that I probably sound like someone who's too deep in the industry at this point, but sooner is better when it comes to getting in a home, buying a home, because the second rates drop, you can refinance, or all those bidding wars that are happening, that's going to drive up your property value that you were already in.
Absolutely.
And so I qualify now and refinance later. Like it's a good time to do it. That's my advice. One, and some people in the audience might roll their eyes at what I'm about to say, but when I talk to people off the street, or sorry, like I'll go to a friend's house to watch a football game. Like in Philadelphia this weekend, went to a friend's house to watch the Eagles game. We had a little party. And the people there are going, hey, we've heard of the assumable mortgage. And I'm going, I kind of have that same look. There seems like there's gotten some narrative out there that you can take over the existing homeowner's mortgage rate. Oh, they have a 3.5, which I looked this up. But sorry, the way it would work would be they have a 3.5% rate and 27 years left on their amortization of the mortgage of their 30-year fixed.
Great.
I'm going to take that over. Now I have a 3.5% rate for 27 more years. And so I looked it up, and obviously most places don't offer, most conventional originators don't offer an assumable mortgage. But also, if there's 2 sides of the coin here. One, if I'm an underwriter and the previous owners had a 750 credit score and the new homeowners have a 620 credit score, I can't underwrite to the same, like, I can't just give you that rate. And on top of that, if I'm in the secondary market and I have this low, the primary, like, rates in the secondary market right now are 7%. Then rates, I originate a loan at 3.5%. I'm selling that for 85 cents on the dollar.
Yeah.
Like, I'm not getting any money for it. I'm sorry if I'm breaking up a little bit, but
No, you're
what are
good.
your
I
thoughts
can hear you. I mean, in full transparency, I've never touched a loan. I'm still doing school mortgage banking. Like, I understand like the qualifications and everything, so it makes sense. But I just, as a consumer, I also think that I would have a lack of trust. Like, if someone was talking about this assumable mortgage, um, you can assume an FHA loan, but you must qualify. Interesting. And yeah, I mean, I just think as a consumer, I don't know how much I would believe that. Especially because I think that you just consume so much information on the mortgage process. But yeah, I think if I was going into a home and that was an opportunity, I would pursue it, but also there would have to be so much more due diligence in the research process. But yeah, that's mind blowing to me. I haven't heard about it and nobody's brought it up in my interviews. So that's interesting.
Because to a lot of people, it seems like that's the solution. And Jill, I'd love if you could chime in more if you're still listening. But I haven't heard of anybody really offering this. Is it any FHA approved lender is saying, let's do this, we might as well do it? What's the adoption been like out there? Because when people come to me and I'm the mortgage guy of a friend group, and I say, I haven't heard of this, and they're going, well, I'm doing that. I seem like I'm living under a rock or something. So audience out there, yeah, John says VA loans are assumable too. People help fill me in here. Servicer has to approve it, says Carlos. But if this is a viable, I mean, like I said, I come from the capital markets side of things, and if I'm like, re-originating a loan essentially, and it's below market rate by 300 basis points, I can sell that for 80 cents on the dollar. Maybe there's no secondary marketing transaction that occurs because the asset is still the asset, but the whole thing seems a little wonky.
Yeah. I mean, I would love more information on it.
Yeah. And obviously, Joe, that's a good point. You do have to come up with the equity, which last week's show, if people tuned in, was all about this model of putting down 20% on a mortgage is antiquated. We should be looking at 3% down loans. We should be looking at down payment assistance programs. That's a much more viable solution for millennials. So I very much, I'm sorry, Allie and I are going to be kind of squinting at the chat here, but
yeah,
I very much tuning in and giving us some tutelage here. Assumable, buyer has to qualify and pay the difference from the sales price and current balance. I get all of that. And it's so maybe the takeaway here too is it's good that companies are looking into more product offerings, expanding their book of business so they can keep finding ways to originate. That's kind of the name of the game. Do I bring on a second product? Do I bring on a HELOC product? Like, am I bringing on these down payment assistance partners? Companies are really looking outside the box to be able to originate more loans. Allie, you thoughts on this? You're gonna go back to your friends now and say
I mean, I'm just glad nobody's brought it up to me because like you said, there's like a designated mortgage person in our friend group and it's me. And Lord knows if they're wanting to buy a home, they're gonna talk to me about it. So yeah, I need to know about this. So I've been reading the chat, but I haven't been brought up this, not obstacle, but question yet.
All right, well, let's get back to some of the localized surveys that you've done. Obviously, people want to own homes and they're much more rate agnostic than we would be led to believe being in the industry. What were some of the other findings that kind of struck you that you think are worth sharing?
Absolutely. So the biggest thing that I've been trying to focus on with our lender clients that have asked like, hey, what can we be doing? So I did a survey and I said, what's the biggest obstacle between you and home ownership today? And again, this was in February, March, but I put interest rates, I put down payment, I put monthly payment, and I put the education process. And 45% said the education process, where to start. And as someone in the industry who has attended so many sessions about how to reach Gen Z, how to be helping future borrowers, I was just like, holy cow, if that's the biggest issue, like, how can we talk to you about it? And so then I sent out a survey and said, what is the best way that you're engaging with educational and news content? And I put TV, podcasts, email newsletter, and then social media. and 71% said social media. So in my mind, I was like, okay, if the biggest obstacle is education, where to start? You're getting your education through social media. Our industry needs to be present. We need to be helping more borrowers to romanticize this idea of home ownership. I know it seems pessimistic, but there's some beauty to it. The 4 stories I saw last week of homeowners really proud of this accomplishment. Like, how can we emphasize that type of content, be sharing it, and really just highlight the wins and the pros to buying a home, while still staying very transparent with borrowers. But I think social media being the biggest educational content vessel, that was huge for me.
So since you are here this week and we have a chance to talk to a true Gen Z, Kristen and I are just 2 millennials saying millennial things back and forth, back and forth. Can you highlight the differences to listeners between Gen Z and millennials, at least when it comes to financial decision making, or the ways that they trust people or list people, go to people for advice? What are the differences you feel like are worth knowing?
Yeah, for sure. So I think there's some key highlights, and Kristen and I have talked about this a couple times back and forth because she also did a Gen Z survey that we partnered together on. But some key highlights are like, I was 10 in '08. Like, I remember it was pessimistic, but in no way did I know it was just the mortgage industry. Like, I think the industry has this issue with millennials that they like keep them in the same bucket as the crash in '08. But Gen Z was like in elementary school. So as you know, you're trying to figure out how to best get to know and gain trust with that next generation, or those 23, 24-year-olds in your life. I think '08 is irrelevant. I think it was just another cyclical downturn like what we're in right now. I think a huge thing that our generation also has dealt with is in 2020, that sounded weird. 2020, we were most likely in college. Like, I was in college. My parents had to make space for me at home to come home and quarantine. So I have a friend group of 10 girls that we graduated with, and I want to say at least 5 of them still live at home because of 2020. And they have no rent. They are living the life. Like, they all their income, they're getting promotions. So they have this hunk of money that they've been saving. And so millennials may not have had that when they were graduating. Their parents didn't have to create space for them to come home and quarantine. They didn't have to isolate, get roommates, figure out really how to quarantine for 6 months without losing their mind. So 5 of my friends still live at home and have a good amount of savings. So that will really benefit our industry as we're talking about down payment and that 20% versus 3% down. Some borrowers may qualify for the full 20%. But like living with my mom for 6 or 7 months, I saved up a lot of money. So that's a difference that I like to highlight. And then when it comes to trust, I think the way that we're sold to, I think millennials could relate to this as well, and just our population as a whole. We've grown up in this like era where our information is readily available online. So those industry leaders who are like cold call, coffees for closers, like, I've been with so many friends that get unknown numbers, like call them and like try to talk services, and that's going to be a hard winning model with my generation because we're so easy to press decline and block a number. Because you Google our name and our phone number, everything comes up. My mom is very similar. She's very like unlikely to answer a random number, just because of how readily available data is. And so I think that's a shift that our industry is going to have to take on how to get creative, how to connect, how to really talk about our offerings in an indirect manner that people aren't avoiding our calls. What do you think, Robbie? Do you think that's something that you guys have dealt with as millennials as well? Like, this idea of all of a sudden our data is public information and we get 5 unknown numbers calling us a day?
Sorry, my internet froze for a second, but can you hear me okay now?
You're good.
Okay.
Yeah, can you hear me?
Yeah, I can. So I have this weird thing in my mind of Gen Z where it's like, not only, well, you made a good point about them being able to save up more money. I have this thing where it's like millennials can't afford a down payment. Gen Z for some reason can. And I don't know if it's because they're influencers and have found money to, like, through social media. I don't know if they hit the Bitcoin lottery earlier. I don't know if their parents are more likely to give them. I don't know what it is. but I have this thought in my mind that Gen Z can afford a down payment much more than millennials can. And I'm not sure where that came from, but it seems like you're corroborating that.
I think that's true. I think this idea of side gigs that I read about a lot, like that's definitely something that our industry is going to have to reevaluate with this influencer era. Like I have friends who make thousands of dollars off social media. How is that going to go into their ability to qualify? Like there's all these caveats where my friends are like saving money, but also our generation and in my interviews, even with I have a 21-year-old brother and I've interviewed a lot of his friends. They are all very financially motivated. So as soon as I can get in a one-on-one setting with them and talk about this idea of equity and you're spending $2,000 a month on rent that you will never see again versus if you're putting it into a home, chances are you're going to appreciate in the home, but also you'll have equity built up so that you're building generational wealth through home ownership. And it just takes like getting them one-on-one to have these conversations to where I can literally see a light bulb and they're like, oh my gosh, I need to be thinking about this. So I think also our generation has more of like a full spectrum look to where I think we're very financially motivated. We want to make sure that, and I'm sure millennials were too, but the conversations I have, as soon as you break down that wall, that barrier of like, having their full attention, that's also something that I think we're going to struggle with. Like, it's so hard. I know me as a 24-year-old, I didn't let my walls down until I was stuck at a layover with someone in the industry and they tried to pitch me buying a home. And I was like, don't try. I'm in the industry. I know. And they were like explaining to me really just the visual of the money that I will no longer be like building up. So I think it'll be important to just talk about the financial gains and the wins with that next generation because we do have a lot of money saved up. And I think COVID is part of that. Student loans, they're going back into action, but they were taken away for a while.
You alluded to your friends that are living at home. You say, living the dream, living large, living fat with their parents, saving up money. Is that not the dream? Or do they not want a place in Nashville where they can go out to the Gulch with friends or hit the honky tonks? Like,
yeah,
no?
I mean, it's glamorous. I love my life right now. And like, I have a gratitude journal. I'm so appreciative of my lifestyle right now. But do I think about my rent? Yeah. And I've talked about this on the podcast before. I'm actively looking to buy a home. I don't need everyone messaging me, but it's hard. And I will say, like, if I could move home for 6 or 7 months and save up money, I would love to. I mean, I probably could, but I think people eventually want to move out. But when they look at rent prices, they're like, holy cow. Like, I know I've talked to my friends. I'm like, hey, why don't you move to Nashville? They're like, because I'm living rent free. Like, why would I? So I think that's something that, like, but do you want to live with your parents forever? I don't think so.
Free dinner sounds pretty good. But yeah, then you gotta start taking care of them when they get older. I don't know if I want to do that.
Oh my gosh. No, I think
No,
it's
we're
more so
digressing.
like, don't you want your privacy? Don't you want to feel like an adult? Like,
You don't need to talk to me about privacy. I bought a place so far away from everything that I have satellite only internet out in like the forest. And so I need like more social life, which I'm going to New York City for a month. Starting tomorrow, I rent an apartment there in West Village. If we have any viewers in New York City, you want to meet up for a coffee, let me know. Patty Becknell says she will help you buy your home, Allie. I'm saying, Patty,
thank you, Patty.
Get in line. You're not the first person to say that, but I do like the approach. I like the smiley face and everything. Allie, I want to get to kind of the rapid fire, get to know Allie Carty. And like I said, you're welcome to ask me questions about me, but you're kind of the star here. And I'm going to loop back to something I said at the start, and that is you're kind of everywhere. You're all over. Dare I say you're spreading yourself a little thin. I get tired of keeping up with your schedule. How do you choose what commitments you want to do in the mortgage industry, and how do you say no to people?
That's a really good question. I think I'm still trying to master that. But when I first started doing this, I was really just kind of hopeful it would gain traction. Like, hey, I want to help our industry. I want to learn more about it. And while I'm doing that, I want to add value. And one of the industry pioneers, Sue Woodard, I had the opportunity of asking her advice, and she told me be a yes woman. Try to do as much as you can. And I think she has really, really done well at that. And she's built up this amazing brand, and I can tell she's so passionate about helping people. So I kind of took that advice and I ran with it. And I don't know if I'd say spread thin, but I am really trying to figure out how I can best spend my time to help as many people as I can. While still being a yes woman. It's provided me so many fun opportunities. I've got to meet so many influential people. I'm having lunch with a senator here in Nashville tomorrow to talk about what his thoughts are on home buying and like how I can be a part of the movement. So there's different like doors that have opened just because I jumped into my LinkedIn, like posting always like talking about Gen Z. But it is a struggle. I don't think I've been at a point where I'm like, oh my gosh, I've got to stop because I am so passionate about it. But yes, it is. I am a little bit all over the place, but like I'm not an animal today. I'm having major FOMO. But yeah, it's something I'm gonna look at come the first of the year, really figuring out where I can best allocate my time. But Robbie,
Yes,
you're also the man. Like you have a podcast. Like
major
you have a
FOMO. Look,
very
here we are. Here we are at annual, everybody. Look how fun this is. Here we are. Sorry. Go ahead.
no, yeah. So I think that like you and I are very similar. Like I'm all over the place, but you're all over the place too. You just I feel like you're a little bit more discreet about it. Like I'm always posting. Like if I'm
Yeah.
in a business suit and I picked out my outfit this morning and I look fabulous, like I'm posting it. We're taking pictures. Like that's just my personality. I love romanticizing everything about just my life. It makes me happier. It makes my friends wonder what I do. It helps me talk about the mortgage. Like I just love it. So I'm a little bit less discreet.
You're a little more photogenic than I am. Although
No.
I have so one learning lesson here, and maybe I'll revert back and I won't take my own advice. I didn't really go to any parties here at MBA annual. I used to be
Not
in
even
my
Tim
20s.
McGraw. Tim McGraw's tonight. So you
I
got to
know
go
Tim McGraw's
tonight.
tonight. I'm torn between. There's a Phillies game tonight I could go to. There's the Mexico versus Germany soccer game down there. There's Tim McGraw. I have my apartment in New York City. I was thinking about going home and just going to New York and hanging
No,
out.
you have to go to Tim McGraw. Like that's a free concert. I live in Nashville. So, but I do
I'm a
like
country person
baseball.
too. I
Isn't
went
it
to
like a World Series game? It's like a playoff, right?
National League Championship Series. But so what I was going to say
Pretty
quickly,
expensive.
we're in the mortgage industry. Well, yeah, excuse me, people out there listening, if you would like to sponsor this show and help me get to
Oh
some
my
more
gosh.
baseball games, reach out. Look, we could have we could have cool backgrounds again instead of whatever that is.
Oh my
Anyway,
gosh.
uh, when I was in my 20s and I'd go to these events, I would be like, how can free drinks, free food? How can I afford not to just like gorge myself? And then you realize like you being drunk at a work event is not a good look. You stuffing your face at a work event's not a good look. So I've gotten a little better about that. Uh, I I travel around a bit. I'm getting better at putting myself out there. Uh, it's
Were you
easier.
I feel like you do. Like I've
Well,
listened to your
it's
podcast since
gotten
I started.
easier. So when I was younger and I'd work for companies in the industry and they'd want to send me to events, I'd go and I'd roll my eyes. But now working for Chrisman LLC, I enjoy it more because every effort that I put in and me being out there with my face and showing my face, it comes back to Chrisman LLC. And so it feels good. I want to build a larger media empire for us. We have the newsletter, we have my daily podcast, we have this weekly video show. I do a show with my dad, Mortgage Matters, on Wednesdays, which is similar to the Rundown, but way better. So if you people are watching the Rundown, come over to Mortgage Matters on Wednesdays instead. Ali, I'm talking to you. And so we're working on building that. I'd like to get some more realtor newsletter type stuff built. So expanding, audio, visual, written, those sorts of things. So for me, going to conferences is easier. And this kind of ties into what I'm going to ask you next. You can flip it around to me, but what is the longer term goal for Ali Carty? Do you want to be on the origination side of things? Do you want to be on the compliance side of things? Do you want to be strictly on social media? What do you hope for? Speaker?
Man, this is like I get asked this a lot and I'm still trying to figure it out. I just bought Finding Your Strengths book because I think I'm so excited to be in the industry. I just have to figure out what I want to do. Like, I'm really passionate about being part of the movement that hopefully our generation will see. I don't know how, but I want to be a part of the discussions where we're trying to work with more first-time home buyers. We're trying to make affordability a little bit easier. I would love to just be in the industry long enough to see change and be a part of it. But I also just have this passion for helping originators to use social media. to talk about their brand, romanticize the idea of their job and the mortgage process, even in this industry. Like I get sent so many videos where they're like, oh my gosh, like, is this true? Is this not true? Like, how can I help our industry capture that business and get my generation into home ownership? I've thought about going to the origination side just so I could have a little bit of a foundation. But right now, I'm really just diving into MBA courses, trying to learn as much as I can. Like on Sunday, when I'm watching football, I'm going through the NBA website, trying to figure out a little bit about capital markets because Lord knows it's very intricate. So I'm still trying to figure it out, but I just want to be. I'm in it for the long run. I just have to figure out where I can really play to my strengths. So I don't know today. I would love to hear where your head is at for the future as a young professional in the mortgage industry.
Well, I have 6 or 7 years on you, so don't feel like you need to rush to figure it out.
Well, thank you. But I appreciate the question because I am actively thinking about it. I'm trying to figure out where, like the Strengths Finder book, like trying to figure out where I can best play to my strengths.
And I hate how zen this answer is going to sound, but you got to kind of let it flow a little bit in terms of like, I took this opportunity, it took me here, I met these people, they offered me this thing, versus feeling like, what's my strength? I need to like ride this bull.
Yeah,
Figure out what
I need
so
that
let
advice.
it flow and kind of see where life takes you a little bit. I'm really fortunate. I worked at mortgage companies throughout my 20s. I ran a lock desk, ran a capital markets team, went to a AI company, went back to the secondary side of things and was trading loans. Then I switched over to MCT where I actually ran their content because I wanted to learn how to run my dad's website and build these WordPresses and newsletters and email marketing campaigns and that sort of thing. Left my day job back in April, and this is not good career advice for anybody, but I've had the best work-life balance ever since I left that. I write my dad's newsletter for him. I do my podcast. I do these weekly video shows, and I travel around and golf, as you know, which is why we can't meet up. I'm too busy golfing. But life.
No, that sounds awesome.
So finding ways to add value and expand the kind of media content offerings of Crispin LLC are where I am. I should throw in
what successes have you, and I'm gonna throw some at you, like with your experience, like working with the email campaigns and like trying to figure out how like media really works. Like I'm trying to figure that out too. Like I know what I post for my friends to see, but what's your opinion on like how to create the most professional video content? Like, have you messed around with that at all?
I'm
Like,
not professional at all. I'm not
but like
professional.
you do like podcasts and stuff, and like you make it so like I feel like it's very professional.
I've heard consistency is the key, and have your kind of your thing that adds value to people. It's not spamming people if people find your content valuable. And that's some really good advice that I got. If you're just kind of blowing up LinkedIn to blow up LinkedIn, people are going to tune you out at some point, unless you're really engaging in things that they want to see. So that's the feedback I've gotten. I'm going to cut this off though. You and I could talk for hours about this. We're out of time.
Oh yeah, it's oh my gosh, 1:45.
You and I catch up offline or something. But where are you next? Where are you off to?
I'm going to a sales rally on Thursday to talk about Gen Z social media. If anyone has any needs to talking about social media, Gen Z, reach out to me, Active Comply. And then I will be at MBA IMB in January. That's my next mortgage related event, I think. Big event. And I will actually be speaking with Greg Shear and KP on social media. So that's going to be a good conference, but that's where I'm off to next.
Awesome. I saw KP yesterday. Love that man. It should be great.
He's a king. I saw him doing karaoke somewhere. Someone posted about it.
Goodness gracious. Well, I very much appreciate you coming back on. Hopefully I will see you digitally before then. Thank you everybody for tuning in. We appreciate it. Join us next week. I think we have Brian Gaudio coming on to talk about some marketing strategies for you guys. But thank you as always. Allie, you're the best. We'll talk soon.
Thanks for having me. All right. Bye, guys.